If you think geopolitical wars only destroys wealth, think again. Because the US-Iran conflict is shaking the global markets right now, and while many stocks are selling off, some investors stand to make significant gains. In this video, I will explain where the money actually goes when markets fall, and which assets historically outperform when geopolitical tensions surge. The US and Israel have launched military strikes on Iran and triggering a rapid escalation in the Middle East. This is not a rumor, this is a real risk being priced into global markets. Investors are now bracing for a broader economic impact, and risk assets are suffering. Asian and US stocks futures are already down. Meanwhile, oil and gold prices are jumping as trader price in supply uncertainty. Looking at the chart, after the events, we saw a massive push on oil. Same story with gold, same story with also silver. This is very simple. How about the energy markets and oil supply? Let's get technical. Why does the geopolitical conflict translate into investment opportunities? Well, because the Middle East is still the heart of global oil supply. Why? Because around 20% of the world oil trade passes through the Strait of Hormuz, a choke point right next to Iran. When conflicts spread there, markets rise the geopolitical risk premium on oil. Right now, oil spiked up nearly double digit in under a week. Higher oil tends to push energy company profits higher, especially for major tankers and producers. As you can see here on the chart, looking off the WTI crude oil, almost 30% double digit in only one night because of the attack. Now, we remember one thing. On a weekly time frame, we can actually spot at the time where Russia attacked Ukraine. Oil also spiked the same way. And what actually made the price going down is because the situation of geopolitical tension, the situation of punishment on Russia make the war stops and the world start balancing everything. That's why oil spiked down. Right now we have the same situation, and here you can actually see that the price went up straight. Also, we remember that when this kind of situation happens, safe haven also rise higher. So for investors, we have theories always. We have opportunity that we can actually talk about, because we can actually see you can buy energy producers, we can buy oil infrastructure companies, or look at breakout in energy ETFs. Actually very interesting. Now, why am I talking about gold, silver, and other metals? Actually, when fears hit markets, money flees risk assets and rotate into safe havens. That's why we can actually see this. Gold price actually surge and S&P rise. And analysts are actually even talking about historic gap up in the conflicts continue. So gold is not just rising, it's being priced as a fear asset. When equity market tumble, gold usually rallies. Same thing for silvers. As you can see here on the daily time frame, what happened? A big push, almost 5% here on gold in one day. Even though we already know that gold is actually targeting this level right here, we also see that on silver, same situation, almost 10% on only one night. We already know that price is actually targeting this one. But like I said, gold is not just rising, it's priced as a fear asset, and when equity market tumble, gold usually rallies. And remember this, when this situation happened, when on the weekly time frame, you can actually see that the price came down to this major level here and react sharply after collecting a certain kind of liquidity. Now, because of the fear in the market, money rotates into safe havens. It's as simple as that. So it is actually time for us to jump into this kind of situation and opportunity if you want to reach higher profits. Here is another area that benefits during geopolitical crisis. I'm talking about ETF or defense stocks. As you can see here, we gain almost 2% overnight. The price is still dancing. If this crisis continue, the price could surge and target this level right here. When we look on the weekly time frame, same situation happened when the price here on 2025, when the stocks, the S&P 500 rise, also the stocks rises. But recently the price tend to go down. But Trump announced they will attack Iran if they don't agree to the term. Now, recently they attacked the Iran, and then overnight we gain almost 2%. Defense stocks usually, hold better than the broad market during conflicts because of government increased defense budget. Everyone wants to be ready, especially Iran right now. They need to be ready, and actually they are asking Russia to provide defense. Even though they already had defense, they are just preparing defense because we never know why and when the US will attack again. And we expect that they will continue to attack. That's why we are saying this. If the conflicts continue to maintain, these stocks, especially safe havens, defense stocks, will continue to rise all over the world. But there's still risk. Where not to go? Because growth tech and risk assets often underperform during these periods. As you can see here on the chart, the Nasdaq actually slipped. This means something. Even if safe havens are growing, I'm talking about gold, silver, and metals, even if ETFs are growing. Even if oil are growing, a lot of techs are actually going down. This is why the major index, the Nasdaq, is actually slipping. And usually during this kind of period, investors rotate capital away from price earning expansion stocks into real assets. That's why we see this kind of situation. So it's actually very risky now to trade indexes. Now, why this could make investors rich? Geopolitical risk premium. When conflicts intensify, oil price embed a risk premium. Gold and safe havens rally. Defense stocks outperform. And in this kind of situation, the market becomes very predictable. Very predictable, because if this tension holds, the gold can actually reach very big highs. Same situation with silver, same situation with defensive, and also oil, same situation. That's why we said this. Buying into these stocks right now is actually a very good opportunity, and expect the tension to hold. Second thing, the rotation strategy. Because smart money doesn't panic, it actually rotates from stocks vulnerable to external shock into commodity plus defense plus safe haven, like I already said earlier, into currency with demand increases, like right now the dollars and also the CHF. So what I'm trying to say is this: in this kind of situation, the dollar is actually very strong, very strong. So everything with dollar will just continue to rise. Now, third thing is this: the mid reversion in risk assets. Once tension cool, high growth stocks can rebound faster. Remember this. So if, for example, right now the US and Iran are trying to make a certain deal, even though they refuse, if they agree on a certain deal, the market can rebound sharply. But let's be honest, guys, this is not a guarantee money-making event. It's not, because investing is actually risky. The markets are unpredictable, especially geopolitically. A trade or a signature can be done without us knowing, and the market will just react sharply. So the second risk I want to talk about here is this: the prolonged conflict equal inflation pressure. And we already know that the central bank policy becomes less predictable. The global banks, the global trade disruption, and the rising shipping cost and insurance premium. This is not cheerleading, guys. This is a scenario analysis. If oil rise to $95 to $110 plus per barrel, it can slow global growth and hurt equity bonds broadly. And investors and big banks are actually watching this. Yes, markets are volatile. Yes, some stocks will fall, but conflicts create distinct structural opportunities if you know where to look. So focus on energy producers, oil infrastructures, gold and precious metals, defense and security, safe havens currency. Remember, it's not an emotion, it's a logic. Position into sectors that benefit from geopolitical uncertainty. If you like this kind of video, guys, don't forget to like, comment, and subscribe. See you next time. Thank you for watching.